Good morning. Welcome to the Forex Pro Charts weekly analysis for the week beginning October the 24th, 2010. This week we are going to be looking at the USD CAD for our weekly analysis. As we look at the USD CAD on the monthly time period chart, we can see the solid edges of our playing field marked by these solid black lines. In addition, we can see the monthly and weekly armpits marked by the black dotted lines. These armpit areas, beginning with the monthly armpit, indicate an area where we might expect to see price reverse long term. The solid edges of our trading field are the monthly highs and lows, and we would expect normally to see price have a higher probability of reversing as it approaches the outer edges of our trading field. Once price passes the weekly armpit, again, the probability that price will be reversing increases. So as we're looking at our monthly time period, we are always looking to see where on our trading field price is, and we can see that the CAD is basically at the monthly armpit towards the lower edge, the support edge of our trading field, and has been hovering there and ranging for several months, really for almost a year if we go back this far, but definitely for 4 or 5, 6 months right here. We also see a couple of weekly and monthly extended trend walls that could be acting as some form of resistance. We're also looking to see what the overall trend is, and we see the overall trend is down. And this is important for traders who are looking for longer term price movement. We generally want to be trading out of a supply or demand zone in the direction of the overall trend. Now, day traders who are trading the 60-minute armpits for the bounce can trade in either direction. However, they will want to be careful the closer we get to the outer edges of our trading field that they have adequate risk to reward ratio. And of course, the closer we get, the less likely that they'll be wanting to take a trade in that direction. In other words, as we get closer and closer to the bottom, if we're towards the very bottom, obviously we're not going to be wanting to take a sell because there won't be any room to go before price is very likely to reverse. So the overall trend is down. Swing traders are going to be looking primarily for sells. Day traders will be still have plenty of room to take trades in either direction. Now, as we look at the weekly chart, we can clearly see this consolidation pattern that has been going on with the CAD for quite some time, and we see that the price has just been bouncing between zones. This looks to be very predictable. Of course, at some point price is going to break one way or the other. It's either going to move down past this monthly armpit and continue down and then possibly reverse later, or it will eventually move up. So we can't count on this ranging pattern continuing forever. What we see now is that most recently price went back down to this support zone. There are 2 stacked support zones on either side of the monthly armpit, bounced off of the top support zone and moved up to this newly formed resistance zone. Now, one of the things that we like to look for on the chart is the pattern of the candles. And if you've studied the material on our website, you know that one of the things that defines a zone is the rally base drop pattern of the candlesticks, or of course, if you're looking at a support, drop base rally pattern. And that this is crucial in order to define a zone. We look for those patterns on the daily time chart, and whenever you see a zone drawn with these gray crisscross lines, then there will have been that rally base drop pattern on the daily time period chart where that zone originated, and that's why we drew that zone. However, when you go to the weekly time chart, you're wanting to see if that same rally-based drop pattern is present at your zone in order to gauge the relative strength of the zone and the relative likelihood that price will be either reversing long-term or at least making a significant retracement. Now, as we look here, we see that this zone that price has moved up to, this lowest resistance zone, we don't see the rally-based drop pattern at the origination of that zone. In fact, we see that at the origination of that zone on the weekly chart, it was just part of the overall larger downtrend. The zone above it, however, we do see that at the origination of that zone, we had the rally base drop pattern. So what that means for us is that swing traders, or traders who are looking for a longer term price reversal, will probably want to wait until price moves up into this zone here. Traders who are looking for the bounce off the 60-minute armpit can take that trade in this zone, but then because price is not expected to necessarily reverse long term here, they may want to place a closer control on the remainder of their trades after they close out that first portion of their trade when they've reached their first limit and gotten their sure profits. Then after they move their stop to break even, if we are going off of a less a zone that is less probable that price will reverse long term, they may want to protect profits more closely than they would otherwise, and take profits at intervals, protect profits at intervals down instead of just leaving their stop at break even and letting price run all the way down. So that's primarily what we're looking for as day traders with the rally base drop pattern on the weekly chart. We're trying to indicate how likely it is that price will actually reverse and go all the way back down to our ultimate target. Now we have moved to the daily chart, the daily time period chart, and we're going to examine price movement a little bit more closely and determine where we are most likely to next take our trades. Now, if price continues to move up into this zone right here, this is a fairly large zone. It is well over 100 pips. Actually, it's closer to actually over 200 pips. So that is too large of a zone to trade based on the daily armpit, although we often do see a bounce off the daily armpit as we did right here. That is not consistent enough, and the risk is large enough that as successful day traders we do not want to consistently trade that daily armpit. The area that we are looking to trade on a consistent basis for our bread and butter trade is this 60-minute armpit right here, and as you can see, the risk on that 60-minute armpit is much smaller, and we expect the bounce still to occur and possibly give us just as good a price movement as we would get off of the daily armpit, but without the risk. So as we're looking to see price moving up, you can see that price has already kind of bounced off this daily armpit a little several times, so it probably will not bounce again if it's going to continue up, or not bounce significantly. So as price continues up, the presence of this extended trend line could provide an additional resistance, an additional resistance factor in the zone if it is crossing these 60-minute and 5-minute armpits when price reaches that level. So that could provide an additional resistance and encourage a stronger bounce. So we like to see those extended trend walls running through our zones when price is approaching that zone. So day traders looking for their next trade, if price moves up, we'll be looking for a trade off the 60-minute armpit. If you trade the 5-minute armpits as well, you can take it there. Once you have gotten that trade and followed our signature trade strategy, which we discussed in some detail on last week's video analysis of the Euro USD, towards the end of that video we discussed our signature trade strategy and how to implement that. So once you have captured your profits there and price moves in whichever direction, if it continues up, then again we're forming a zone where we're more likely, or entering a zone where we are more likely to see, if you remember from the weekly chart, more likely to see a significant price movement, and the 60-minute armpit is very nicely positioned here for a very small risk, and we would expect to see price move up in, bounce off that 60-minute armpit, and using this, again, this extended trend line as support, as resistance, If it's still in relatively the same position, then we could see a very nice bounce indeed. Now, if price does not move up and continues down, well, that's not really a problem. That's one of the beauties of the Forex Pro Charts trade strategy, is that it really does not matter which direction price goes. We simply wait for price to reach a 60-minute armpit. And you see that here we have added a new zone. We have a daily armpit here, and we have a 60-minute armpit down in this zone that is below the monthly armpit, and that zone has been cross-hatched, which indicates that it is dead. We've left it on the charts because we like to see what price did. We usually leave them on for a week, but because this new zone formed here, we're not going to be trading this zone right now. So we will be looking for price to hit the 60-minute armpit down here in this zone. If price does drop, and again, the presence of the monthly armpit will give impetus to a bounce off of that armpit, and we can be making trades there as well. Again, because that is against the overall trend, the overall downtrend that price is taking, you'll want to protect your profits carefully and move your stops accordingly so that you don't have any unnecessary risk. Now, looking at the hourly time period, we're really not learning a whole lot more than we learned previously. On our previous time period, we had already seen where price moved to the daily armpit and did bounce, and it did this 1, 2, 3 times, and now price is just kind of meandering around, deciding which direction it will take. We would probably anticipate price moving up into this zone and eventually reaching the 60-minute and the 5-minute armpits at these levels. But again, if it doesn't, if it decides to move down, we'll be trading this zone. Here is the daily armpit, and the 60-minute armpit is below in kind of down into the dead zone. So this zone here, we'll want to be cautious with because of the presence of this dead zone here, because of the monthly armpit and the extended trend wall. We may see price bounce up here in this zone. You need to consult your trading plan. Our basic trade strategy for conservative day traders does not call for entering trades up here. More aggressive day traders who have built that kind of thing into their plan will want to consult their trading plan to determine how to handle that. So that concludes our video analysis for the week on the USD CAD. For more information or to subscribe to our full analysis and charting services, please go to our website, www.forexprocharts.com. You can get more information there and look at the different subscription options that we have to enhance your trading and help you become a successful Forex Pro Charts trader. Until next week, good luck with your trades.